All right, guys, we have another special Super Bowl Sunday scan. We're recording this one a little bit early, and we're trying to get it out early so that you have time to watch it before the big game. And so we're going to get right into it. We'll go over a few watches that are going to be, at least of interest for next week. But first, we want to kind of go back and take a look at some of the things that we talked about last week, how you could have used it and applied it for the week ahead. And, let's just get right into it. Once again, I've got Chris on. So thank you for being here.
Yeah, of course.
Like I said, we went through quite a bit of things last week. And, it's very hard to go over concepts and talk about things because a lot of times it ends up being after the fact and it feels like an I told you so. But, our goal with Sunday videos is to give you the concepts so that you can apply them for the week ahead. It's not about telling you, hey, told you so. It's about, all right, let's reverse engineer. Let's go back and see how we could have potentially, maybe better anticipated that trade or maybe found other trades, just like you were talking about last week when you were kind of setting up for the Mara trade, the Bitcoin trade. So we can actually jump right into that. I know that you had talked about your interest in the potential of Bitcoin and that reversal trade. And for me, of course, I fumbled it. I know we talked about it on Trading Takes, and we both kind of had the same thought process where we felt like there was going to be this huge, sell a news event. It's going to fade off. And that was kind of like the obvious trade that everybody was sort of expecting. But we both agreed that it was going to slowly but surely kind of head back up towards the highs. And, what's funny is it looks so obvious and then it flushes and it looks just so bad. And all of a sudden you just, snap your fingers and it's right back and breaking out again. So I saw it. I watched the whole thing. I hope that counts for something. But I definitely did not partake in any of the Bitcoin trade this week. But I know you were watching it. How did you trade it? Did you trade it, and how did the week go?
Yeah, the week went really well. On last week's Sunday Scan video, we talked about just kind of like mapping out the field for Bitcoin. We knew that it had a big move up, big move down, and then it kind of just consolidated. And so Bitcoin's one of those assets that it has huge volatility. And so even though it's in an overall uptrend, the drops are so dramatic that it can shake everyone out and just make them think that, oh, it's another bear market coming. And that it's like, no, it's an asset that regularly moves 25% in each direction and then stalls for a while. So just kind of knowing the volatility of the asset that you're kind of watching, or at least that's how I approach it. But so we had a nice consolidation in Bitcoin, and it started to kind of base on that 43,000 level, 44. And then I saw a move coming. And so what I did is I just got the go-to names ready. So if you could pull up my screen on Mara. So this is what I was really watching this week, and I was waiting for the breakout in Bitcoin to come, and we talk about the anchor concept, and that's really a big tool that I use for my trading. And what an anchor is, it's basically the analogy of like a ship and an anchor. Of the ship goes, some kind of asset goes, and then what does it drag behind with it? So it's basically highly correlated things. And so an anchor could be a stock that moves other stocks. It could be a commodity that moves stocks. It could be, any two things that are very closely correlated where one of them moves first. And so I saw Bitcoin starting to move. I was prepared for which names I wanted to go to if that were the case. And so on Thursday, it might have been actually Wednesday, Bitcoin started to break out. And so I got calls in Mara. I got 18 strike calls, and that was when the stock was at 1750. And over Wednesday night to Thursday, we had a big $1,000 or $2,000 move up in Bitcoin, and Mara opened at 19 or so, and then it ended up going all the way up to 24 or something by the end of the week. So I cashed out my calls earlier on. The first thing that I do whenever I take an options position is I make the position free as soon as possible. So whenever I get a double, I either put a stop loss on half of it, or I can just sell half of it outright because I want to recoup my money. The options world is a world where you really need a couple of big wins to help average out the losses over time. So if you can reduce those losses and still have the big wins, that's when you can really grow your account with it. So the first thing I did was make the position free once it hit 100%, and then I ended up cashing out the rest at about 175% or so. And I had a few runners on it, but that was the nice trade, and it ended up going a lot higher. It could have been a 10x trade, but I didn't catch all of that, and that's okay. I wanted a great trade, a great move, and you're never going to capture every bit of it. And I think it's important to stay into a good headspace of just appreciating when you make a good trade instead of being like, oh, I missed that, or I could have done better. It's like, yeah, you can review to see if you could have executed a little bit better, but also be happy. And if you did something according to your plan, then be okay with that.
Yeah, I think that's a big thing with these options. Even when I used to play the SPY ones, I'm not trading size, and sure, maybe I get 1,000% here and there, but if I'm trading those with more capital and I'm always shooting for that 1,000% or whatever, like what you see on Twitter sometimes with these ridiculous percentage gains, I mean, over time, that's not a good business model.
No, not at all. And yeah, especially if you're trading something like an index or something, if you're trying to do the same asset day to day, it doesn't always have edge. And so it's really about waiting for opportunities where you have a very clear setup. Something's very likely, it has high reward, and then it's your job to basically reduce risk as fast as possible. So that could be, lowering your position sizing so that instead of having a stop loss stop you out after $500 or $1,000, just only putting in that much to actually be able to run the position a little bit more aggressively. And then when you do get a double, being able to sell out half of that, and then you still get the upside if it runs.
Yep. And one of the other ones that I'm watching for next week, because as I said, I missed this entire bull run on these, but CLSK reported, and then they also, they're outperforming the rest now. Usually it was sort of Mara taking the furthest out of them all. Then you had Riot, and then you had kind of CLSK just kind of sneaking up behind, but CLSK just doubled within, I think, 4 or 5 days. So it went from a 7 pullback to 8, and then it went to, I think, mid 14s or so today. So I'll be definitely watching that one. But once again, anchor concept, driving it in, into your heads. If Bitcoin continues to go, don't be focusing on trying to fade CLSK, Riot, and Mara. You need Bitcoin to be red, trending down, in order to have a proper edge on those particular trades. Yes, if they start to parabolic and give a quick opportunity, that's different. But if you're sitting there and trying to find the top, and Bitcoin is just trending higher, you're going to waste a lot of time.
Yeah, totally agree on that. And speaking of edge, and I know that a hot topic on Twitter this week has been edge erosion, and this is a topic that is very near and dear to your heart because your house almost got washed away. So I think we have some photos. That's real edge erosion right there.
That's edge erosion right there. That's right. This is a couple down for me. But basically all the new yards that were, not poured, but, backfilled anyway, got washed out because there just is no root system that is going down enough. Whereas mine has been there for like 100 years, as well as my neighbors. And you're only as strong as your closest neighbor. So what happened is any of these, you can see like 2 or 3 of them are pretty new. And what happens? They dig it all out and then they backfill it. So if that neighbor goes, then the next one's going to go, the next one's going to go. But yeah, that's some serious edge erosion.
Yeah.
But on a more serious note, I know is a super popular topic, and I mean, we've been talking about it for over a year, maybe longer, where things are starting to get crowded and that you need to kind of adapt. And one of the things that we've been just talking about is just being patient. Watch your sizes and let others. One thing that I've been saying over and over and over again: let others pay for the information, right? And yes, there was a period of time where you could just enter into a position, into any stuff move, and like that's it, it's going down. But now those stuff moves, if it immediately soaks back up, guess what? Everybody that just acted is now going to be on the wrong side if it holds. So really the biggest, I would say, change over the last year is just being patient, and it used to pay to be ready to react to names, but now there's just so much volume. And the difference between, now and prior to COVID is just the amount of volume and the amount of players. Obviously, we've lost a lot of players since COVID, but there's still way more than there was. And there's a lot, when the market's just melting up, people take speculative positions. So things that normally would just be pop and drops, they're getting soaked, they're getting absorbed, and they're lasting longer. And the thing is you don't know, are they sellers or are they shorts that are selling it? And, there was a couple this week where, the easier the trade is, the more cautious I want to be, because you don't know, is that just shorts kind of slowly hammering it down? And then, what happens if it swipes? And there's a lot of times when you don't have that, have an option, it just swipes right up into a circuit halt. So you have to be proactive in this market, and you have to stop doing what everybody else is doing. Yes, that is the obvious trade. So let people take that trade. Let it prove that that was the right trade, and then start to get into that, rather than anticipating it like everybody else and starting to get chopped up and getting squeezed out into some kind of crazy move. So, we even had a lot of that, that just even today on INBS, that was one that we were talking about, and I'll try to pull this up quick. INBS was a mover today, which, was a liquidity trap. We've talked about liquidity traps quite often. You've done a video on it as well, where you had this huge volume day, which was about 95 million shares. Then it drops down to 3.8, drops down to 766,000, and then about 600,000 to 300,000. So we basically went from almost 100 million to within a week, 300,000 shares traded, right? So now when it pops back up, if it starts to firm up and continue to hold like it did today, and they turn that volume on, you've got a lot of potential shorts left over that were maybe swinging it. Also, ones that got trained last move to go ahead and step in front of it and go for it. So a situation like this is there's no point to step in front of these things. Let it blow out, let it slam back down. And that's different than what I used to do. That's different than what a lot of people did. Let it do the whole blowout, let it sit back, let it come back up again and fail. And at that point, that's when I started to really, pay attention. Is it staying heavy, or, is it still absorbing? And if it's absorbing, there's plenty of action out there. You don't need to force trades right now. Think bigger picture, think macro. I think a lot of people that are getting eroded are the folks that are looking too micro. They're looking too much to nail the exact move, rather than just looking at sort of the big picture. And, an example of this INBS today, everybody's, trying to fade it like last time. Last time it kind of faded off the highs, and everything's good, but you have to recognize where they're absorbing it. And you can kind of see it, 870s, they're absorbing it, 870s again, they're absorbing it. And the level that we kind of identified in IU was that 1030 level. And I said, as long as it's trading over those 1030s, risk off, be cautious. But what happens is everybody's doing the same thing. So where does everybody stop, right? 1030s triggers the stop. And you can see in this candle right over here, it rips through 1030s, immediately fades off. And the thing is yeah, that's obvious. Like, that stuff, great. But I'm still not interested in that trade. What I'm interested in is after it fails to follow through, after it proves that 870s is still trouble. So that was a great opportunity. Yes, I wish I took some of that, but what if it went into a circuit halt? 11, 12, 13. I didn't want to ruin my Friday, and I wouldn't suggest you do it either. So there was a better edge down here. Yeah, it's $2 cheaper. But you know what? You don't have that $2 or $3 or $4 of outlier risk if it went into a circuit, into another circuit, into another circuit. So anyway, edge erosion, yeah, super, super popular. But like I posted, and Lance had a great interview with Dr. Katz, who I've been working with. But you know what? It's just traders always look externally, right? And sometimes you got to just look inward. And the answer's there. It's not always like, oh, well, they're losing a lot too, so okay, it's no problem. They're having a tough time too, so it's okay that I'm having a tough time. You need to just look at you. You need to look at your trades, look at where, what's tripping you up, and do your best at avoiding those. So what do we got next? Play of the week, HOLO. We talked last week, again, driving home a point, right? So we talked last week about how you could do no wrong on all these recent reverse splits and, names that were raising money. And so we had REBB, we had PBLA, TENX, NEXI, and just, no matter what you did, if you shorted it and you held it overnight, I mean, you got negative 50%. There was like another 2 or 3 other names that just did it. And it was just rewarding people for taking positions on micro floats and giving them negative 50, 60% the next day. And so then we had, and so anyway, the conversation that we had last week was, these are the times where you want to be a little bit more cautious. If you think about like a scale, right, where shorts are starting to get, like it's starting to weigh down a little bit, the scale's going to tip because the confidence is so high. And so what happens is every now and then one gets away. And so we talked about it. And look, you can look at HOLO and wish that you had nailed it. And you can't forget the risk. These China names, HOLO used to or was one of the prior liquidation trades. So if you're trading it long, you have to be okay with the fact that you might get stuck in an 80% drawdown, right? Because a lot of times these things go circuit to circuit to circuit, and they don't really give you a chance to get out. And so anyway, this thing started trading. It traded over $1 billion, 190 million, almost 200 million shares. And so it started to kind of show the signs of what we had seen before. And one of the things that I encourage people to do, and some people are good at it just in your head, which that's one of my strengths. Other people like, Lance or Sam or all these different traders will put it into memory through, Evernote or whatever they might use to, accumulate data. And so where have you seen this trade before? Where have you seen this action, basically this blueprint? And so as soon as HOLO started to go, it right away, it reminded me of HUDI. And if you compare the two charts, HUDI and HOLO, you can see the same action, the same trap where multiple swipes, stuff, slam down, swipe, slam down. But each time it's holding a higher base, higher base, higher base, higher base. And they're churning and churning and churning and creating this environment where it looks so liquid. And it is, but that's not the real picture. They're painting that by, tossing shares back and forth, back and forth. There's no reason this thing traded 190 million shares. I mean, that was not just retail coming in and, actually trading that much. That was algorithms and who knows what they do. But point is that, number one, I know there's so much FOMO and everybody wants to nail that next one. You can't have FOMO on these. What you can do, though, is show up the next day. And, we kind of talked about this before, but anytime there's a 5, 8, 1,000% runner, in this case, I think that was like 2,000%, show up the next day. There's going to be so much opportunity, so much FOMO. That is what you should be focused on, not trying to find the next HOLO, right? You're playing something just like Chris was saying with options, right? You're trying to nail this next 1,000, 2,000% option. Well, what's going to happen? More often than not, you're going to fail. So if you're spending your time trying to find the next HOLO, you're going to fail more often than not. The idea is anchor concept. Once again, what is going to move? What is moving off of HOLO? And we had HKIT. We had MLGO, we had WIMI, we had TOP today. And so the key is to show up after those things move, and that's where the real edge is. So that's what my focus, and I'm going to chalk that up to why I missed the Bitcoin rally, because my focus was all on HKIT and MLGO this week.
Yeah,
So
and that's good. I mean, everyone, like we talk about, we all have different styles and different things that we focus on, and so just because something that I really like is moving well, I mean that's great for me. But if you're watching something else in another basket, wherever people have their strengths, that's really where it makes the most sense to focus in, and that's why it's nice to have a broad exposure to all those things. But I think that you traded the right way for your style.
exactly, and I think that a lot of people do that is they're always looking at externally at what everybody else is doing. But you know, why did you have a confidence on that particular trade? Why did you know that was going to happen? It's because you came prepared. It was your work, and I feel like a lot of people are always looking for other people to tell them what to do or give them the confidence they need to sort of press the button. But the reality is the confidence comes from you putting in the work and coming prepared and knowing, hey, if this happens, if X happens, I'm going to do Y. And, that's really the key, in my opinion, on having the right sort of confidence in this trading space. So what else we got? We talked about NYCB. We talked about the banks, regional bank risk last week. You touched upon, a trade that you would take, how you would play it. Obviously, we saw it unwind even more, and then we saw it stabilize today. So what are, did you play it or did you watch it, or do you have any thoughts or things to add to last week's conversation?
Yeah, that was another good play last week. So we were watching NYCB, which I'll pull that up on my chart, NYCB. And so this was one of those names, the regional banks, some stress in the system. It's going down, the stock price is crashing, the preferred shares are crashing, you have puts rolling in. So basically all signs are pointing to it flushing down. And what we talked about is that if we did get news or if we did get a lot of heavy action of this flushing down, what else is that going to take with it? And that would take things like KRE, which is the regional bank ETF. It would take things like WAL, maybe ZION. And we're talking about the couple of days where they flushed down and they followed it. So that's really what I was watching this week. And as we did get an NYCB move, I was able to trade KRE. I got 47 puts once the move started to happen. And just the anchor concept, again, highly correlated assets. You have something that kind of sets off a sector and drops it. And I was able to get 47 puts, 47 strike puts in KRE, which is the regional banking ETF. And I got between it hit 100%, made it free again, sold half, and then was able to ride it for about 200% or so, and then start to level out. And we talked about it last week too, how even though we have a move like this coming, it's not the same as it was last year when we had all the fear and more widespread fears. This is more of an isolated incident. So you get a couple day move, and then it starts to basically drift back up. And it's a good point on positioning because whether you're in a bear market or last year or like with the HOLO trade or anything like that, positioning really matters. And so you'll get a catalyst for why something is either ramping up or why it's selling off. And as that gets more and more and more crowded, basically the edge goes away. And so a perfect example on NYCB is, okay, so it's crashing down here. People are buying puts at $4 and things like that. And as it's dropping, you have to think about there's only limited reward. And so if someone's getting like $3 puts or whatever, it's like the most you can make is $2 or $3 on that. But if it gets a piece of headline news that goes the other way, then all that positioning can come off. And so with positioning, if it gets too crowded and the reward gets too limited, that's really when you can have that scale tip and get a giant move the other way. And so we saw, on Friday, it had a decent move up, 15%. And that's really just the short positioning, the puts starting to roll off, especially on a Friday, because that's when all those put options, they'll lose their value and it'll help to boost the stock up a little bit. So I did make a nice trade on it, but it's just a good lesson in positioning and not to get too attached to a thesis, but just to understand that, things are correlated. You can play that, but, be open to the positioning changing, the risk reward changing, and don't try to, squeeze every last ounce of something where the reward is just not there anymore.
Yeah, especially when you're trading the options, because it's good, 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 and as soon as that turn happens, that premium and everything, it just sinks. So you don't have much time, and that's the real key of locking in along the way, because there are some ridiculous percentage gains that you can have by taking that, but only if you take it. So last couple things I think we hit upon, MLGO trade, HKIT trade. We can touch upon that a little bit and put up the trades that I had made this week. But this is an example. So with HOLO, obviously it went crazy and it went to 50 after hours. We saw similar to this on a few of these other trades recently, like ZJYL. Not as much volume. Obviously, that was thin one, but top back in the day, and a few others. But this obviously being the main ship that's driving everything, and so things started to go a little bit nuts after hours. For me, yeah, there's a great trade here, but I typically like to focus on the ones that are not the main one. And this MLGO up for no other reason than sympathy. So we had a nice little run up. And so my interest started to get involved right over here, because we had a quick, basically double. It went from like 80, 90 cents all the way up to 170 or so. And so I put on a couple feelers just to kind of get a feel for the situation. But my entry was basically in the 160s, and then I added on the way down. We had a couple failed follow through type of setups, and you can even see just how this is working as well. You can see, zoom in properly. People start to get familiar with this like 112 level, right? And it peaks out again. And this is what I was talking about, is if you start doing the same thing as everybody else, then you're going to panic. And you really want to put yourself in a position where you size down because that's the right thing to do, not because you have to. And so when I see this kind of peaking out at 112, I know that if I'm going to start to size against 112 and it breaks it, I'm probably going to panic cover just like everybody else. I want to be able to be on my A game. I want to be able to make a trade, into that move as it exhausts out, as it fails to follow through. So a lot of people start to see this 112 as the top, but it just needed to exhaust out a few that were crowded, comes back, retest again, and then we obviously got the nice puke out the rest of the way. And same deal, HKIT. And you can kind of see this should look extremely familiar to anybody that's been, watching Sunday videos. We always go over this exact setup, failed follow through setup. And you can see how this now support level cracks, comes back, and then this is the first time that it actually fails to follow through under that key level, which is similar to the concept that I was talking about today on this INBS, where this is the first time it cracked under and then rejected under that prior line of support. So same concept all around, but that's where my focus was this week. And again, I'll have Damien throw up some of those charts from the trade. But one thing that Chris and I were talking about earlier, he had mentioned that he has been really focused on having a healthy relationship with trading. And I think that's important. What does that mean to you?
Yeah, so that was one of the goals for the start of this year, is to be much more structured as a trader, and then also to have a better relationship with trading in general. And we talked to Jack Kellogg on Trading Takes a few weeks ago, and we touched on this topic too, where so many times we're tempted to be trading all the time, like we have to, or almost like compulsively trading, constantly trying to find something, forcing trades. And it's just a really exhausting and not a very fruitful process. And so just, changing your outlook from I have to trade, I have to find something, to really just spending time mapping out, what could potentially happen, and do I have a trade if this were to happen, and then letting the trade come to you. And so just being really prepared for things, looking at for myself, like looking at things like the Bitcoin sector, looking at the banking sector, looking at the AI sector, like with NVIDIA and SMCI. And so if I can get a good read on something and I have go-to names for a scenario, then just kind of waiting for that to play out, And then throughout the day, just kind of scanning, waiting, watching for that right moment where everything aligns and I have a good read on it. It has a low risk, high reward kind of set up to it, and it's highly probable. And that's really what I've been trying to focus on. And then obviously sizing correctly for whatever vehicle that you're trading. And it's just made such a world of difference of not only, trading results and performance, but also just how you feel throughout the day. It's like you don't feel as burned out, you don't feel as exhausted from constantly just like trying to make something work. It's more, you can just take a breath, and it's a long road. I mean, if people enjoy trading, they're going to be doing it for a long time. And so just a sustainable, healthy relationship with trading, and not focusing on, oh, if I would have held this more, this would have been great, or I shouldn't have done that. It's just, just relaxing and just going a little bit slower.
Yep. I 100% agree. And that's something that I personally have been, working on over the last couple of years, because I was that trader that, you try to find the trade, you try to find everything that could potentially make you something. But, what you see and what a lot of the great traders that I know, I mean, they're trading so, far and few between, so minimally, and they're only showing up for example, after HOLO, right? There's no reason to trade the rest of the time for some of them that have already, made it. But you always gonna like, what do you do when you're trading your best? You're waiting for those names to come right into your wheelhouse. And so the trade, like you were saying, it should feel right. And if it doesn't, it's because it's not right. And there was a couple times, like even today, PLTR, no, not today, it was yesterday, but PLTR, I start to get in there, and I was expecting it to potentially flush, and it didn't. And I knew that within 5 minutes, and it was maybe a dime move against me, and wasn't doing what I expected. So am I going to sit in there, waste my time, get burnt out, and watch it grind me 50 cents, or just take the small loss and move on? And that's what I've been really good about doing, is just a small position, get in there. Yes, it's right. Scaling a little bit, let it work. One other thing, I used to scale and try to put on as much size as I wanted to, but really you want to protect your average. And, I've stopped doing that. That worked so well in COVID, where, the bottom just drops out. So you want that size on in the event that the bottom drops out, you've got it. But it started to work in reverse, since then, because the markets were a lot less liquid, more thin, and, you get in trouble more. So one thing that I've been doing is just let everything happen and then show up and trade a little bit smaller. You feel so much better because you're letting these things work, and you're actually probably making more with less risk, less size. So 100% agree. And I don't think it's talked about enough as far as, what people should be doing as a proper trading. And I do think that it's important to have it, because otherwise it's going to own you. And, I've been owned, by trading for quite some time. And so that's why I've put so much focus on getting that time back, and sort of trading to live rather than living to trade.
Absolutely.
All right. So for the last part of Scan, as always, I am not a financial advisor. Neither is Chris. These are not buy or sell recommendations, and this is for educational and informational purposes only. Only a couple watches. I haven't been too focused or too aggressive with my watch list lately, because you wake up, after HOLO, you've got 200, 500, 1,000% gappers the next day. So you don't need to do as much work trying to find the ones that stand out. Also, you have so many earnings. You've got, ARM this week. You had PINs this week. You had AFRM today, right? So there's so many different opportunities. You have PLTR, fantastic fader today. So these are great vehicles to trade surrounding earnings. And I always like to trade these for the at least a couple days surrounding them, 3-4 days, and then kind of take a step back and look at, all right, what's happening on more of a macro level here? Am I starting to kind of pinch pennies, or is there a bigger trade setting up? So right now, PLTR, hopefully it continues to head higher. Hopefully the market just keeps on going up, because when the market goes straight up, everything else is good too. You start to get these crazy moves like INBS and HOLO and HKIT, and really you can't ask for anything better. So my focus next week is going to be, some of those earnings plays, BLTR, AFRM, ARM again, and even NET. NET was a great one today, NET. And I think that we're going to continue to have some really, really good range. You don't need to take big size on this type of trade, especially when they're fading $3, $5, or $10 per share. Then CLSK, I'll be watching. This one I like the best right now out of Riot and Mara. I do, because it's extended and it's extending better than Mara and Riot. So I want to focus there. But if Bitcoin doesn't agree, then there's no trade there. So the only time, like I said earlier, is some sort of parabolic move that I can react to, because it's such a big name that, these things don't go straight up. And when they start to speed up, there's a really good chance, based on the way in which I trade and how I can see the markets in a situation like this, that's a high edge, high probability trade for me. It's not for everybody, but that's something where, I shine. And so that's a trade that I would take. Otherwise, the only way that I would trade that is if Bitcoin agrees, and if Bitcoin is starting to fade down and start to, correct. But other than that, we've got these INBS, MLGOs, HKITs. I think we'll still get a little bit more mileage out of them over the next couple of days, especially on maybe, day 3, day 4 type bounces, just like we had on this MINM. Which started to fall off people's radars. And one last thing that I'll say before we can get into Chris's watches is, stuff like MINM and NRBO might not fall on my radar, just a little bit too low liquidity. But these are great account builders, because people take them off radar when the volume's gone. But if you're trying to build a small account and you're trading 500 or 1,000 or 2,000 shares, these are fantastic vehicles, because people take them off radar. Typically, they have some sort of morning fade, and then they just slowly fade back off once the squeeze is done. There's a bunch of momentum that comes in. Shorts come in, they get squeezed out. As soon as they cover, it just kind of trickles back down. Repeat. And so a lot of people always try to nail the hot stock of the day. But a lot of times, if you don't forget the hot stock of the day yesterday, there's a lot of action that you can take from that, especially if you're building an account. So get to Chris and see what he's got on radar for the week ahead.
Yeah, so a couple things that I'm watching again this week. I'm watching the AI theme with NVIDIA. So NVIDIA has earnings February 20-something, so it's in about a week and a half. And so I think that that's going to be such a major event that you're going to see a lot of plays continue to really ramp up higher into that. So we saw with SMCI, they had earnings a little while ago. They ramped up, big move, and then they kind of come back and they consolidate, and then they keep going higher. So 2 weeks ago, it was SMCI. This past week, NVIDIA had a great move up. And I think that as we get closer to NVIDIA's earnings, we're going to start seeing some of those secondary names really start to move. So I think ARM kicked it off. That's going to be a watch. So again, it's these AI companies, there's so much hype around it. And when earnings releases come out, the market is basically seeing who's actually making money from this and who's not. And they're separating that. And so when you have something like ARM, having great earnings or whatever, they're going to gap it up. And then it's now a playable theme for, hedge funds or other people. So as it dips, they're most likely going to soak it up and then keep moving it higher with the AI theme in general. And so now ARM is officially declared, a validated name for that. And so SMCI had a big run, NVIDIA had a big run. Now it's going to start dropping to the names that are playing catch up. So ARM is definitely going to be on watch. And again, if SPX or if the market in general keeps ramping higher, and if AI and chip names are really the hot sector, then those are going to be the strongest of the strong names. And so what I like to look for is if we're having uptrend days in SPY or SPX and we have a strong theme, then I like to look for the strongest names, the ones with the most potential upside. And so looking for dips, looking for levels that hold, and then trying to position to get some long trades out of that, whether it's mostly with calls in my case, but every now and again, I'll do some equity too. So ARM is on watch, and also AMD. Kind of same concept. AMD, it's been a little bit of a lagger in that section or that sector of AI. But I think that as more and more money flows into it and you get more saturation with NVIDIA, you're going to have more money just kind of fall to, by default, some of these other names. And so this also had some positive option flow for the next month. And so it could be a sign that this is getting ready to have a big move. And again, this is like, I have it on radar now, but only if it starts acting really strong and starts to have relative strength. That's when I would get interested for possibly playing that trend. And then if the AI theme kind of falls apart, or if the market starts to pull back, then I would look for something like AI, the stock, which is obviously, kind of a garbage name, that it has high short interest and it trends up with the sector, and but it's got no real fundamentals underneath it. So it's nice to watch it and you can have it squeeze out with the other names. But if the market pulls back, then these get hit especially hard because you don't have big funds that are in their position trying to soak it up. You just basically have shorts getting squeezed out perpetually and some retail longs. And so if you get a big move down, then that's going to be a go-to name for me, as long as it's acting like that and if it has relative weakness. So again, just putting out a thesis, and then if it agrees, then I have a possible puts play in the market. And so in addition to kind of the AI theme in general, I'm still watching Bitcoin and Mara and some of those names into next week. And I think it's just like a side point. If you have a theme that's working really well and it's very in play, like Bitcoin or AI, you might be playing it week after week. But as long as it's in play and you have a good read on it, you can get a lot of really great trades off of those moves. And so it's tempting to always try to focus on like what's the next theme that's going to be running or whatever. But if you have something that's moving well, then take advantage of that, because there's many periods in the market where you don't have something that's trending very well. And so that's how I like to trade, if I find a strong trend that I can ride. So back to Bitcoin, if we see a giant ramp up in Bitcoin and then it kind of, gets ahead of itself and stalls down, I think you'll have a pullback in a couple of these names. But if you start to see some, dips and then soaking back up in Bitcoin, I think that these names are going to do the same thing. And again, you have the Bitcoin halving coming up, and that's where a lot of the miners get their revenue cut in half unless they, scale up production. So a lot of people are looking to fade these names already. So unless Bitcoin has a parabolic and then slams down, I think a lot of these will start to continue to grind higher. And then I think those are the main watches. And then usually for small caps, I see what's kind of in play that day. And if I have a setup that I like to trade, like liquidity traps, or if something's doing an ABCD where it's just making higher lows and you can tell someone's in there, then I'll try to play those as well.
Awesome. Yeah, the SMCI is insane. NVIDIA, insane. I mean, it makes a lot of sense. It reminds me of Tesla back when it first was going to 1,000, like the first time when everybody's like, there's no way it's going there. And then it's 1,200 and 1,500 and 1,800 and before it did the split. So it's going to be interesting to see if they end up doing a split or if it just goes to 1,200.
Yeah, I think it's one of those names too, especially with SMCI. And I'll pull that up real quick. So, and we've talked about this before, but, people see this chart, on the year-long chart, and they think that, this is just an insane move. It's parabolic, unsustainable. But so that's like the two-dimensional view of it is just the chart shape. But then you have to look at the three-dimensional view of what's actually happening underneath. And if you look at the earnings, if you look at the revenue, they're all doing that same thing. They're all parabolic. The revenue and the earnings are doubling and they're tripling. And so it might look like this is super extended. And of course, it's moved a lot. But if the fundamentals are also moving in line with that, then this is not as crazy of a move as a lot of people might think. And so it can last longer. And I would agree that I think this is very similar to the Tesla move, where it just went absolutely nuts for 6 months. And you have the option activity and the gamma all squeezing it. So it's a very fun name to watch. And I like to trend this one as well.
Yeah, I think I was talking to somebody this week, and I don't think it was SMC, I think it was NVIDIA, but they were comparing the amount of option flow to Tesla back in the day, where when all this stuff started to go crazy. Plus, SMCI also digested a good portion of that move. It flushed multiple days, and I feel like everybody's been trying to find the top, but when they flush and come back on that same day, and then do it again the next day and come back. That's digesting the move. That's the profit takers. If you were price sensitive, you're out. Otherwise you're just going to let this thing run. So be super, super cautious. And like we were talking about, divide it out by 10 or 100 or whatever you need to do to get a better read on these things. But the reality is, if you saw a stock that doubled or tripled on, revenues, numbers, all that kind of stuff, and guides up higher, and the stock went from 3 to 6, consolidated, went to 750, you probably be thinking it's going to go to 10 next. And so, for whatever reason, us looking at a $300 stock going to 600, 750, sometimes it feels like it doesn't make sense. But I would be willing to bet that if you saw that stock go from 3 to 6 to 750, you'd be thinking 10 to 12 was coming around the corner. So, as always, we like to give away free t-shirts, and great takeaways last week. We got a lot of great feedback for this layout, having Chris on here and doing, more options, more of a macro view. So that's always good to see. We've got long 267. We have the shadow 850. And we have Techniques Trader. So email me, webmaster@investorsunderground.com. We will ship you out a shirt, and enjoy the Super Bowl. Hopefully you guys were able to watch this before the Super Bowl, and can't wait to see. I think there's some betting going on with Taylor Swift too. So it's going to be quite an interesting. It's actually very, very good. I feel like for football and the numbers, it might be the most watched ever. I feel like her entire all the Swifties will be watching.
Yeah, we're gonna have to put some Taylor Swift bets on main watch for next week. So
exactly. All right. Also, Chris and Sam and Judah dropped trading takes with Sang Lucci, who is always awesome. So it's always good conversation. There was a lot of funny moments on that one. So give it a watch, and we'll see you in the room on Monday.
See you guys.